Welcome back to another roundtable. My name is Adam. I have Rusman.
Hello.
And Victor.
Hi everyone.
Thank you so much for joining us. Today we're going to talk about two companies and we're going to compare them and find out which one is the better business. All right, and they're very similar businesses. And if you recall, some time back we did a roundtable on SDRs. Right? Singapore Depository Receipts. And the first few SDRs were in Thai companies. And one of the Thai companies was called CP All, which is the operator of 7-Elevens in Thailand, which is a huge market. And we have our own 7-Eleven company in Singapore as well.
Yes.
And it's run by Dairy Farm. So we're going to compare these two companies and just kind of find out which one is actually the better business model. So they're quite similar, but a little bit of differences as well.
Yeah.
All right. So Rusman's going to represent Dairy Farm. All right. And Victor's going to do CP All.
Yep.
So before we jump into, which one's better and all that, we need to understand what the business is all about. So very quickly, tell me more about Dairy Farm.
So Dairy Farm, they're not in the farming business, right? So I think by now you should know, right? So, but they're in the business of a few, they're actually quite diversified, right? So I think one of the business, perhaps let me start off with Singapore, is that if you go to cold storage, I think that is one of the businesses they own, right? And if you go to 7-Eleven to buy drinks, okay, that's also the brand that actually under them. Okay, they also own this brand called Guardians. Alright, so this health and beauty stores,
pharmacies,
so drugstores. And they have other brands like your CS Fresh, which is still under cold storage anyway, and they also have like Marketplace. You probably have seen in some of the shopping malls in Singapore, right? And in Hong Kong, they also own some of the brands very similar to Singapore format. Okay, but it's just that they have Starbucks. Okay. Right, and Singapore also, Starbucks is actually run by them, right? It's under the brand called Maxim. That is actually the holding company, right? And they also have like 7-Eleven there, okay, the franchise. And in Hong Kong, they also have like in this thing called Guardian, but they don't call Guardian there, they call it Mannings. Yeah, so Watson and Mannings are very popular in Hong Kong. If you go there, I think you see a lot of stores everywhere, right? So so those are the main key brands that they have. And of course, they also have IKEA in Hong Kong, Macau, and Taiwan, and also Indonesia, right? So Indonesia, of course, they also have a few brands like a Hero Supermart. They used to run Giant, but they have since closed it down because it's not doing well. And they also have Guardian, okay, and IKEA there, right? And of course, they're also in Malaysia. They run few of the brands like similar brands like Cold Storage, Guardians. And of course, in Philippines, they have this brand called Robinsons, right? So that actually is very popular in Philippines market, right? So I think for their business, the way they classify is actually they call it the grocery retail. Basically, they have their supermarket and hypermarket business, and then they have their convenience store where they classify your 7-Eleven, right, as I think part of this. So in China, they also have a 7-Eleven franchise, but it's only in the southern part, all right, the Canton province itself. Okay, and and they also have the health and beauty business, which is they classify the Guardian and Mannings under the same umbrella. And then home furnishings, which is their IKEA business, and of course restaurant. There are multi-brands over there. So you have this restaurant actually includes not only just Starbucks, but also Maxim brand itself. They're very popular in Hong Kong, and they also have franchise for Genki Sushi, Ippudo, Cheesecake Factory, and Shake Shack.
Wow. Okay. So it sounds like a very diversified portfolio in a sense.
Yes.
But it's all retail and across Asia. In Asia, right?
Yes.
So it's not just 7-Eleven. Dairy Farm does quite a lot of things as well.
Yes.
Okay. Yeah. So we're going to compare that to the business model of CPO. I wonder if it's the same. So tell us more about CPO.
I think CPO is much a simple business as compared to Dairy Farm, right? I think majority of the business is in Thailand. There's some business in Cambodia and also Laos and some in Malaysia, right? So majority of their business, actually, if you look in terms of the revenue, 52% of the revenue actually comes from McCoy and Lotus, right? Lotus is basically the Tesco Lotus, but 2020 they bought over the company, so then they rebrand it as Lotus. So that they control the Lotus in Thailand and also in Malaysia. So McCoy and Lotus is actually sort of the same business where they do the supermarket, basically like your normal like Costco or this, right? But there's no paid membership to that, right? Their second largest revenue is actually the convenience store, which majority is actually their 7-Eleven. They also have other convenience store, but I'm not going to talk about them because majority of the revenue still comes from the 7-Eleven. Okay, despite the 7-Eleven was just 42%, but in terms of operating profit is the majority at 48%. So the McCoy and Lotus actually accounts only 38% of the operating profits, and the other 6% in terms of the revenue is the other type of business like financials and other education business, which I'm not going to say is very small in terms of business. So you can say that the main two business is actually the convenience store, the McCoy and Lotus, these two, right? So it's very simple business that the convenience store, they owns about 70% market share in Thailand. So you look in terms of the total number of stores that they have in Thailand itself is about 13,838. And the stores has been growing since 2010 all the way until now at compounding at about 7.5%. So the stores is always increasing, including the McCoy and Lotus, okay? So if you look in terms of the stores franchise and self-owned, so 51% of the stores are actually franchise and 49% are self-owned. And if you look in terms of the store location, right, Bangkok and suburban, right, is about 43%, and the rest are provincial, which is outside of the Bangkok and suburban, which is about 57%. So that is basically the whole model of CPO, which I think is a much simpler business.
So it's sounds pretty much like a very Thailand-centric business.
Yes, correct. Yeah.
Okay. And also in retail.
Yep, correct.
Right. So these two are kind of similar, but some differences there, but a bit of an overlap. So someone, nowadays because of the SDRs and there's a Thai SDR for CP All in the SGX, a Singapore investor could go like, hey, I have two stocks to pick from. And they're quite similar. Both have 7-Eleven, both in retail, but one's a bit more Asia, more diversified. The other one's more just focused on Thailand.
Yes, correct.
But seems to be doing pretty well as well.
Yeah.
So we're going to find out, which one's the better business. So what do you guys think? Which is the better business? Maybe are they different in terms of growth or maybe in terms of paying for dividends? What do you think?
I think in terms of the store network, of course, if you compare with CPO, which is about 15,000, right?
13,000 plus.
13,000, right? So DFI, which is now they have rebranded their name, right? It's no longer called Dairy Farm, it's called DFI Retail Group, right? So they own about 10,000 plus stores across the Asia itself, okay? So, and this store, if you look at the past 10 years or even 22 years, which I stretch it out here, it seems like they're doing very well. They opened a lot of stores, right? It's been like on the uptrend, and there was some slowdown in 2020, mainly because of the pandemic, right? But actually, if you go look closely on the number of stores that they have across different divisions, I think grocery retail actually peaked in 2018, and then that has since on the decline to date, right?
Okay.
So in 2022, right? And the rest, like your convenience store, continue to do well. Health and beauty store continue to grow, but at a slightly slower pace. And of course, your home furnishing, although the number of stores are small, but in terms of profit contribution, which I'll share later, is actually quite sizable, right? And the restaurant business, I think, is also doing quite all right. Okay, and yeah, so if you look at the revenue for DFI, I think the last 5 years, I think actually have been downtrend, right? It's been coming down. I think one of the key issue with DFI, I think when the new current CEO, which is going to step down in August, right? He actually, when he came in, I think in 2017, he did a major restructuring exercise. Okay, because one of the key issue with Dairy Farm back then was that there are a lot of stores like Giant's, Cold Storage were outdated. Right?
Okay.
They were under investing on the store format, and the looks was dull, and basically the branding wasn't there, and the traffic footfall started to decline, and in terms of profitability also started to decline. So they did a major revamp, and they started to change the branding of the supermarket like Giant. In fact, they just shut down the entire Indonesia Giant business, which is one of the key market that they have, right? Because they no longer find it a very profitable business to run into, and some of the locations that they were chosen in the early days were wrong, completely wrong. So those stores were not profitable, so they closed it down over the years, and so the retail remains a big question mark to me, because when he did that exercise 2018, you see that the operating profit from the retail side of the business, the grocery retail, right, actually has almost wiped out. Right, almost zero contribution versus, in 2011 or 2010, that contribution actually half of the business. Right, so and then in 2018, because they wrote it off and there was a one-off charges in here and there, And then moving forward, of course, in 2019, they started to expect that retail side to do it after their major revamp, right? Like they revamped the Giant branding, and then they revamped the cold storage, and to CS Fresh. Okay, so the format, of course, today if you go to some of those supermarkets, is a lot more modern, right?
Mm-hmm.
I mean, when you go in, it's like it's a supermarket. It's not your wet market type of setting.
I mean, I was at Novena some time back. There's a cold storage at actually both sides, Novena Square and United Square, right next to each other. So I can go to both. And I saw them revamp the store. It looks a lot better.
Yes.
I like to go there. I mean, the aisles are wider. If I go to NTUC, I just like squeeze a little bit. It's a little bit different, but of course, it's a lot more expensive.
Yeah.
And I've seen the changes and all that, and that's because of the restructuring that this CEO has undertaken. Do you think this business is going to, I guess, do better?
Yeah, in fact, in 2019, they started to see some of those results. So retail contributions started to grow, and then 2020, boom, pandemic came, and we all busy buying, stocking up tissue paper. That was actually to the panic buying at the point of time. So there was a huge surge of sales for their supermarket business, but not across the board, right? Like Indonesia, their hypermarket business was affected because of the movement restriction and stuff like that. But overall, they actually benefited a lot. And I look at their grocery retail contribution in terms of operating profit. I mean, 2020 is probably one of the best years they have ever achieved, right? And then subsequently in 2021 and 2022, they have hard time sustaining it. Largely mainly due to the fact that now the restrictions started to ease off, and people started going out. No one is cooking at home anymore. I mean, there are still a few people cook at home, but a lot lesser, all right? And so that shift in consumption behavior kind of like, put a question mark on that restructuring exercise. Is it really necessary, or can they really maintain it? Or it could be a lot worse if you don't restructure it at that point in time, right? So, but at this stage, I think we can see that it's a big question mark whether they can sustain their retail business, right? Their cold storage business, their Giant business, and Welcome, I think in Hong Kong is doing quite okay, right? But basically the pandemic kind of distorted the entire results for DFI, okay? And on top of that, their health and beauty business got badly affected. You can see that their profit actually significantly come down, I think in 2020, because there were tourists, actually a lot of Chinese tourists going to Hong Kong to shop in some of these health and beauty shops. But that dries up over the night, and that actually hampered them, and that damaged them or affected them. And same thing with their restaurant business, which because of the movement restriction, especially in China, it was actually very strict, right? I think in 2020, and then subsequently in 2022, they tried to do this similar lockdown, but it doesn't seem to work. And of course now 2023, things are all opening up.
Okay. So maybe things could look better then, but it sounds like a business that had its heyday maybe 10 years ago.
Yes.
Yeah, and then now it's kind of like struggling to stay relevant.
Yeah.
Still a big business, but the growth is a question mark. Can they thrive actually, or just kind of like plod along for DFI?
I think for DFI used to be a very stable dividend stocks, right? In fact, we have used to invest in this company in 2016, after that divesting out in 2018. We still have some shares there, but it's just a pure profit. But then I have since lost track of the company actually, because I know that restructuring exercise is going to take years.
All right.
And then when the pandemic came, I don't even bother to look at them, because I know that they're going to be badly
So the
affected.
other things that you were looking at is a lot more important, right? During the pandemic and all that.
And then as I look back now, I look at the dividends that they're actually paying out. Actually has since fallen by 80%. Okay, it's like a triangle, right? It used to be like stable paying dividends, and then the last 4-5 years, I think it's just the other way around.
Okay, we'll come back to that, because I think dividends are a big thing for a lot of investors as well, especially for DFI or Dairy Farm in the past. So that's kind of like a summary of or an outlook of DFI. Let's find out more about CPO. What's it like? Is it stronger in the Thai domestic market?
Yeah, I think they are basically like the market darling in Thailand, right? I think there's no issue with the company until COVID happened.
Okay.
Right. So before COVID, I think if you look in terms of the revenue, you can see that from 2010 to 2019, they have been growing very, very steady in terms of the revenue and also net profit, right? Then when COVID hit, it actually affected their net profit. So their net profit actually went down. Then after that, it actually went back up again now, right? But they are still below the pre-COVID records, okay? But you look in terms of revenue, there's a spike in 2022 is because they actually acquired the Tesco Lotus that add up to the revenue. Okay, but since then the business actually has grown much more. They are bigger now with another new business inside. Right, so but if you look at the net profit, it seems like they have dipped and they recover slightly, but not past the pandemic 2019 result. But if you look in terms of cash flow, right, they already surpassed it already. In terms of cash flow, they hit a record high in terms of cash flow. So if you look in terms of the same store sales growth, right, even before pre-pandemic, this company, right, same store sales growth have always been positive, except for 2014. So 2014, right, they actually, before 2014, they are pure 7-Eleven and other convenience store. In 2014, they acquired the McCoy, which I show you, the sort of like a supermarket, right? Then in, I think 2020 or 2021, they acquired the Tesco Lotus, right? So only in 2014 they are negative, but before that they are always positive. Then the same store sales growth actually dropped in 2020 and 2021 because of COVID pandemic. So in 2022, you can see that the same store sales growth go with a very significant rebound at 15.9%. So I think this company is already poised to actually rebound back, and is rebound back to and become much stronger in terms of the revenue and net profit, and in terms of also the cash generation. So if you look in terms of the dividends, they have been paying very consistent increasing dividends throughout until 2019. It was hit, they came down. After that, now they start to rebound in 2022 in terms of the dividend, but still below the previous high, right?
Mm-hmm. All right. So it sounds like this company sounds a bit more dynamic. Like there's a lot more growth in it.
Yes,
correct. I mean, I remember because when I look at Starbucks, I was doing research for Starbucks myself, and same store sales growth is a very important metric for retail stores, because you can only open so many stores before it gets saturated.
Yes.
You need to be able to grow your same store sales as well, because it's really, really important. So that's what's happening with CPO.
Yes, correct.
So
the same store sales is growing.
Yeah, so that's a key point, and it sounds a lot more. It sounds healthier.
Yeah,
from what you described to about DFI compared to CPO, and it's just in Thailand, but it's a big market still.
Yes, correct. Thailand itself is a big market. You see, they're just expanding just within Thailand itself. The number of stores, you can see that they are still growing their stores at 7% per annum, at least 7% per annum.
All right. Do you think the management has a pretty good track record of like just kind of managing how CPO's business? I mean, the way they open the stores, where they open them, how they grow the business?
Yeah, I think the management have a really good track record when it comes to acquiring also, because when they acquire McCoy in 2014, they also continue to grow the business from there. And right now, they actually acquire Tesco Lotus, right, and rebrand it as Lotus. To give a bit of the background, right, the parent company of CPO actually is the original owner of Lotus in Thailand. Mm-hmm. But they sold it to Tesco many years back, and now Tesco didn't manage well, so they buy back the Tesco and rebrand it as Lotus back again. Right? So I think they have the expertise to actually turn it around, and you can see how they actually make like 7-Eleven is like a daily thing to the consumer, right?
Sounds like they understand the local market very well.
Yes, correct. Because if you look at the local market in Thailand, right, you can see that there's only just that few brands that is dominating in Thailand, right? Your 7-Eleven, your Big C, right? Your McCoy, which they actually acquired the company, and your Lotus. So you go to Thailand, there's always these 4 brands around, and they almost got all the 3 brands except the Big C, right?
All right. So let's go back to dividends, because I think, like we mentioned earlier, DFI was, or Dairy Farm was a very consistent dividend payer, and then it just like went off a cliff, and it hasn't recovered since then. But CPO, the dividend seems to be, coming
on an uptrend.
Yeah, on an uptrend again. So, do you think, what happened? I mean, I think we kind of know what happened with DFI, but what do you think do you think the business is going to be disrupted moving forward because of maybe e-commerce, stuff like that for DFI?
I think for the DFI, they were quite unfortunate because they have Chinese market, which I think Hong Kong especially is also one of the key markets that they are in, right? So the problem started in 2019 when there was a huge riot, right, in the second half. That actually affected their manning business, supermarket business slightly. But then things just got worse the last 3 years. If you're in Chinese market, especially in the retail upfront, you would not be doing quite well. Okay, so if you look at the revenue for DFI, I think the retail part, grocery retail is a big question mark whether they can really turn that around. But it's supposed to be a business where it's stable, right? Because if you look at what Sheng Siong has done, have delivered, I think if they are just in a one single market like Singapore, it's very stable. But they are across different markets like Indonesia, and then they have to deal with all those currency fluctuations. Sometimes emerging markets that they're in, the currency weaken against their reporting currency in US dollar, then that actually also will affect them. Right, so and if you look at their convenience store business, I think that is a business where it's largely quite stable, okay, and will likely going to continue to grow, right? And health and beauty business, I mean, it's just a temporary issue that the pandemic actually affected them, so that portion should also recover. And home furnishing business is actually my favorite part in this business. IKEA, right? I mean, I love going to IKEA, especially if you just move to the new home.
Yeah, man.
You visit IKEA.
I'll be going soon again.
Yeah, I mean, because of that, the whole concept that IKEA have actually is amazing, right? So, I think all those segments, once Chinese market emerge out from that lockdown, I think it's going to see a very good recovery for DFI actually, right? It's just that the big question mark now is hanging on their supermarket business. Can they really turn it around? Can they used to be in the heydays as good as those days, you know? But the management at that time, Ian McLeod, actually when he took over, he did a major revamp and then restructure everything. He introduced the white labels product like Medals,
pretty good.
So,
that's very good.
Yeah, I bought their product as well, tissue paper, right?
I think the famous one is their $1 the truffle chips.
Yes, you must have bought a lot of that. Knowing you.
And he also managed to pull up this membership, which is very irritating. You members. It's everywhere.
I have the app.
So I think there are a lot of positive developments coming up from this company, but unfortunately he stepped down. They're going to replace him out with a new management, Scott Anthony Price. I think that will be the guy that used to be at the I also have seems to be quite comprehensive track record. I mean, he has got background in running Walmart Business Times Club. All those were very successful, right? Even successful until today. So is now they got a new management. Hopefully things got better moving forward. It's just that if you are looking at DFI business, I think you are going to have a lot of moving parts in that business, right? So in the past it used to be very stable, but because there's a lot of disruption now, people consumption habit also has slightly changed. After coming out from pandemic, there's a lot of moving parts, but we can expect, of course, it's likely going to be better.
But after the restructuring, it should
be better. It's just that the question now whether can they really turn around their supermarket business.
All right. Okay.
And when they turn around.
And when they turn around. So I think that's a good question. So now the thing is. Yes.
So it's not a dividend play.
It's not a dividend play anymore.
It's a turnaround play. If let's say the management did it well in the next few years, you see everything all the engines that they have, right? Suddenly all gone up, right? Then of course you see the share price today at all-time low. It probably may be recover.
So it is a turnaround play, but there is the risk involved with the turnaround play.
Yeah. A lot of moving parts.
But it doesn't seem as complicated for CPO. More straightforward there.
I think it's a very simple business model. It's exactly like what you said, Sheng Siong, but it's like in Thailand.
Okay.
But it's not only Sheng Siong, it's like 7-Eleven and also other supermarkets and all this. So I think it's sort of like a dividend player that pays very consistent increased dividend. And based on the way the result I look at, there's high probability that they may go back to the previous high dividend or surpass it.
Okay.
Right? So if they were to go back to the previous dividend, based on the current share price, about 2% yield, right? Because they always have been paying very low dividend in terms of in Thailand, right? So the low percent, but then the dividend is growing. So you are buying something that pays a very consistent dividend, but yet this company have the ability to continue to grow. And now their business is much stronger because they bought back the Lotus, right?
Yeah, I think that's a good point, because it's not just about the yield upfront, but as the business as a whole is growing, that can be very attractive as well. I mean, there's capital gains potential as well.
Yes, correct, definitely.
So, I mean, we're not recommending anything at this round table. So now at this point, I'm going to ask you guys, which business do you think is the better business? Which one would you pick? I mean, put the valuation aside. Which is the better business, in your opinion?
I would choose the simple business.
The simple business. CPO?
Yep. eCPO, or we're just comparing with that, but of course DFI has some great businesses in it as well. I think especially like their IKEA business, but that this business is actually separately listed for their Indonesia site under the Hero Supermarket. So that will be more pure play.
Or you can
home furnishing,
you can invest it directly.
Yeah,
through
so
another way.
Some rupiah which I invested. Okay, just to declare upfront. But then for DFI, I mean we only have like some share left there.
Okay.
Yeah, but it's not a company where I actually will be looking at, because turnaround really not an easy way.
Yeah, not easy
to invest, right? Because a lot of companies seldom turns.
Okay, so maybe for most people they would prefer the simpler business.
Yes,
and it's growing, it's paying dividends.
It's still growing, yeah.
Yeah, and it's a simple business that you go down to Thailand yourself, you can see it in action. And I guess for DFI, it's a lot more complicated as you go different countries and
a lot of forex risk.
A lot of forex risk as well. So it's a very different business. So I guess would you had to pick either one?
I would just put them in the watch list.
Or both on the watch list.
Yes.
Yeah, but Victor, you prefer CPO?
I prefer CPO.
Yeah. All right. So I think that's your verdict for these companies. So again, if you're looking at retail businesses in Singapore, I mean listed in Singapore anyway. So you have CPO and then you have DFI. Yeah. You can do this type of comparisons to find out, which one's a better business based on fundamentals, how they operate. I think it's a good exercise, before you just jump into any stock.
Yep.
Compare companies or stocks within the same industry to give you more insight, and then you can kind of like give you a different perspective or a better perspective as well.
Yeah. Again, remember to do your research, because here we just share the surface.
It's a surface. Yeah. You can't really track the companies over a period of months as well to see how they the news and everything. It gives you a flavor of how things, how they operate as well. So I hope you really like this roundtable, because if you're into, doing your research on that, this was probably enlightening for you and insightful as well. So I think that's pretty much guys.
Yep.
Okay, so my name is Adam Brusman. Victor, thank you so much for joining us. Any questions about CPO, Dairy Farm, you want to find out more, feel free to put them in the comment section. We'll answer them for you. If you like this roundtable, hit the like button, tell us we're doing a good job, and of course subscribe to our channel. Many more roundtables coming up, and we'd love to see you again.